Okay, so whether you're a small business owner, a landlord, or real estate investor, you're probably wondering what is the difference between the Paycheck Protection Program versus the Economic Injury Disaster Loan. Let's go and break it down in this video. Hey, what's going on, everyone? This is Sam Kwok here with one of the Kwok Brothers, and in this video, we're going to go and break down the difference between the Paycheck Protection Program versus the Economic Injury Disaster Loan. Now, before we go and break it down, be sure to go and subscribe to our channel if you want more updates about the SBA programs and grants for your business as well as for investment. Okay, so let's go and break down the difference between the Paycheck Protection Program and the Economic Injury Disaster Loan. Now, just to be sure, you understand that you can actually apply for both, but you can't use both amounts for the same purpose. So let's go and break it down. Now, with the Economic Injury Disaster Loan, this is a program that has been around with the SBA for some time now. They just expanded and waived some requirements so that more people can apply. With the loan amount, you can get up to $2 million versus the Paycheck Protection Program, which is an expanded program with the SBA. You can get up to $10 million or 2.5 times the average monthly payroll cost, not including independent contractors incurred during the calendar year of 2019. So that's the first part, difference between the Paycheck Protection Program versus the Economic Injury Disaster Loan. The next thing is the interest rate. With the Economic Disaster Injury Loan, which I'm going to shorten up for EIDL, the interest rate is 3.75% for for-profit businesses. If you are a non-for-profit organization, it's 2.75%. Now, with the PPP, Paycheck Protection Program, it's 1% interest rate, which is very, very low. And the EIDL loan has a term of up to 30 years versus with the Paycheck Protection Program, it's 2 years. Now, both loans do come with the ability to defer the payments, meaning you don't have to make any payments for a certain time of period. With the EIDL loan, you don't have to make a payment of up to 12 months. And with the PPP, you don't have to make a payment up to 6 months. So both programs do have a deferment, but the downside of that is interest do accrue during the deferment period, which means that interest will be calculated and charged even if you're not paying for the monthly payment. So do be careful of that, but the interest rates are not that high, so I'm not going to be too terribly worried about the interest being accrued during the deferment period. Both loans don't have a prepayment penalty, so you can prepay and completely pay off the loans. So that's good. There's no prepayment penalty. With both loan programs, you do have to be eligible to be considered into the loan program. So let's go and first talk about the EIDL side, the Economic Injury Disaster Loan. With the EIDL side, you have to be a small business in the United States and territories, so Puerto Rico and Guam are included, including sole proprietors or independent contractors. You can also be an internationally owned organization located in the United States, private non-for-profit organization, small agriculture cooperatives, tribal small business concerns, SUPs, fewer than 500 employees. Now, let's go and move on to the PPP side for eligibility requirements. Again, very similar to the EIDL, you have to be a small business in the United States and territories, including sole proprietors, independent contractors, and eligible self-employed individuals. Okay, internationally owned organization located in the United States, 501c3 non-for-profit organization, a 501c19 veterans organization, tribal business concerns, tribal small business concerns, fewer than 500 employees in most instances, more in certain industries. So depending on the industry you're in, you can have more than 500 employees and be eligible for the Paycheck Protection Program. Now, let's go and talk about the usage and what you can use the different programs for. With the EIDL side, you can pay fixed debts, payroll and related benefits, accounts payable, so any other debt that you got to pay off, and other expenses that cannot be paid because of the disaster's impact, okay? That's for the EIDL side. With the Paycheck Protection Program, you got to pay for payroll and related benefits, and I believe, and this is just my interpretation, vast majority of your usage under the Paycheck Protection Program has to be for payroll. Okay, you can also cover interest on mortgage payments, not principal payments, okay, just on the interest, and other debts, and also that includes rents and utilities. So if you have an office space that you're paying rents on, you can also use the Paycheck Protection Program to pay for rents and utilities. But you may want to fact check me on this, but vast majority of the funds have to go towards paying payroll. Now you got to keep in mind, understand the intentionality of both of these programs. It's to aim for higher employment, to retain employees, to keep the economy stimulating, to keep the money, the funds, to circulate around the economy. And of course, the government doesn't want businesses to spend this on whatever they want. The government wants the businesses to spend on payroll, paying people, so that we can keep the economy going for the long term. Now, let's go and talk about what you cannot use the money for. So on the EIDL side, you cannot use the money to refinance debt, payment of other SBA loans or lenders, tax penalties, civil fines, repairs of property or other physical damage, pay dividends or distributions to owners or partners. Again, you can't use the EIDL loan to pay yourself, right? To make a distributions to the owners. Can't pay under other SBA loans. You guys get the idea. With the Paycheck Protection Program, it is limited to what we just talked about with payroll, related benefits, interest on mortgage payments. But what's interesting is that you can use the Paycheck Protection Program to pay off, quote unquote, refinance the EIDL loan. So once you're approved for both loans, if you are approved for both loans, you can take the Paycheck Protection Program and refinance the economic injury disaster loan. So the Paycheck Protection Program does seem to have more flexibility when it comes to refinancing other debt, other SBA debt. No collateral is required, but if you are taking a loan more than $25,000 on the EIDL side, a collateral may be required. Now, on the Paycheck Protection Program, no collateral is required from the business or its owners. Okay, now let's go and talk about the interesting side of this, which is the loan forgiveness and grant eligibility. On the EIDL side, there is a free grant, which is something that I talked about in my last video. You get a free grant up to $10,000. So that portion is free. You can keep that money. That's yours. You can use it with the accordance of the CARES Act. But if you get more than $10,000 approved for the SBA EIDL loan, there has to be a repayment on anything that exceeds whatever you got for the grant. So let's, for example, say you got approved for $20,000 in the EIDL loan, and the $10,000 of that is for the grant, and the other $10,000 is a loan. $10,000 you keep, you don't have to repay, but the other portion of the $10,000 is a loan that you have to pay back. Now, you can always take the money, the $10,000, and just pay right back, right? You could just prepay the loan portion of the EIDL loan and keep the $10,000 grant. You can do that. So let's go over to the Paycheck Protection Program side when it comes to the loan forgiveness. Now, there is a pathway for the loan to be forgiven under the Paycheck Protection Program. Now, it appears that you do have to use 75% of the money from the Paycheck Protection Program for payroll costs in order for the loan to be forgiven. So 75%, at least 75% of the money you get under the PPP program, the PPP loan, you have to use it for payroll. Okay, the 25% can be used for other debts, rent, and utilities. Now, another way for the loan to be forgiven is that if you use the proceeds to keep employees retained during a specified period, then the loan could also be forgiven as well. So the main purpose of the Paycheck Protection Program is what it sounds like, right? To protect the paycheck of the employees. So the lawmakers made this so that we can keep on paying our employees to keep the business running. Now, the question is, are there personal guarantees for either of the loan? Now, with the EIDL loan, if you're requesting a loan less than $200,000, there are no personal guarantees. If you're asking for more than $200,000, there will be a personal guarantee. On the Paycheck Protection Program side, there are no personal guarantees required. So to summarize the different loans here, the Paycheck Protection Program does appear to be more geared towards businesses with employees, although eligible self-employed individuals as well as independent contractors may also apply for the Paycheck Protection Program. I'll provide some more updates on that. Be sure to subscribe to our channel if you want the updates. So with the Paycheck Protection Program, yes, it's more so for payroll costs. Now, with the EIDL loan, you can also use it for payrolls and related benefits, accounts payable, other expenses that cannot be paid because of the disaster's impact. So you can pretty much pay for whatever that you need to pay for to keep the business running. On the EIDL side, the Paycheck Protection Program, you do have to use 75% of that money to pay employees and payroll obligations. So those are the main differences. Again, you can apply for both. You can use the Paycheck Protection Program loan to pay off off the EIDL loan. So again, you can apply for both. You just can't use both loans for the same purpose at the same time. Now, with that being said, for real estate investors and my landlords that are listening to this, the EIDL loan does have a provision for lost rent as well. So if that's what you want to apply, I definitely encourage you guys to check it out. With the Paycheck Protection Program, if you have employees, that's definitely something that you should look at. But again, I will provide more updates as far as how Paycheck Protection Program applies to independent contractors and self-employed individuals. So stay tuned. I'm providing more updates. I'm doing more research about this. I'm reading up about the CARES Act. So again, go and comment down below if you have any other research that you've done, or if you want to fact check me, please do so. I welcome it. I'm just a guy on YouTube making commentary and helping you guys as much as possible to make the distinction between the Paycheck Protection Program and the EIDL loan. I hope that this video was useful for you guys and helpful. Be sure to subscribe and click like on this video if you guys want more videos like this. Okay, I'll see you guys in another video.